Union Pacific's second quarter profit fell 12% from a year ago, but the rail company managed to beat Wall Street's estimates for the quarter. Monica Bertrand joins us now with Union Pacific CEO Jim Young. Monica.
And Mark, of course, cost savings has been the name of the game for the rails, even as volumes continue to sink. So we welcome Jim Young, the chairman and CEO of Union Pacific now. Actually, we are looking at what has happened with Union Pacific, and the stock is up, and that is actually after the conference call when there was some discussion about the volumes and, of course, business. And Jim Young is with us now. Jim, let me get your sense about things. You said that maybe we've seen a bottom at some point in terms of volumes. What's the indication of that you're seeing right now?
Well, good morning, Monica. It's good to talk with you again. You know, after a significant fall off, and I'll give you an example, we were running about 185,000 carloads a week a year ago. We're running about 150,000 carloads a week, so you're down almost 20–25%. But the good news there, I think, is when you look at the last couple of months, things have stabilized. And if you look at some sectors, the auto sector, ag products, maybe some spending associated with stimulus, I think there's some potential for some upside in the second half of the year. What
do you mean about the auto sector looking better now? Because carload volumes there were down about 47%.
Well, it's been, again, no one ever predicted this kind of a fall-off, but think about it this way. The first half of this year, the auto sector, they were producing vehicles at a rate of about 3.5 to 3.8 million vehicles on an annualized basis. I think the latest estimates, and I think they're probably correct, is that you're looking at about a 10 million sale level this year. We know a couple of our producers have announced some extended production. So the second half of the year, I think, looks like it has the potential to kick up in terms of production.
Jim, let's talk about cost savings, because that really has been the key driver for earnings beats for the last couple of quarters. Let's talk about the drop in diesel fuel as well for the quarter. So that's part of that. What are you seeing in terms of costs as they continue, I guess, to come down? Is that really where the growth is going to come from now, considering the volumes have been so low?
Well, Monica, you can't save yourself to prosperity through cost cuts over time. You've got to be very smart about it in terms of really understanding the impact. I have to be in a position that when the economy turns around, and it will, that we're prepared to handle the volume. We've been very aggressive in terms of advancing technology, advancing some of the things we've looked at on process redesign. Unfortunately, I have about 10% of our workforce furloughed right now, although we have started to recall some of those, some of our employees. And again, the costs we're taking out right now many of them will not come back into the organization as we go forward, as volume picks up.
What about volume? Have you seen significant pickup in the first couple of weeks here in July in terms of volume pickup for what businesses?
Well, Monica, I hate to take a 2-week trend and kind of extrapolate it out, but in fact, coming back off the July 4th holiday, we have seen some pickup. Our low point was about 3 months ago, where we were running about 135,000 cars a week. We're, as of yesterday, about 151. Those areas would be the intermodal business, which I hope might reflect consumer spending when you look at it on the domestic side. Our coal business is strengthened going forward right now in terms of look at it. So steel business has picked up, and we know there are 2 or 3 plants that have announced their reopening.
All right, Jim, we have to leave it there. Thanks so much. Appreciate it.
Okay,
Carol
Monica.
and Mark, back to you.
Great.
All right, Monica.